Hey everybody. Hey and welcome back to another episode of Crypto Marketing Insights. This is just a quick update for you and something I rarely ever do, which is to show you a chart, which is extremely unusual. But I do it because Bitcoin just did something it hasn't done in, in a long time. Since 2018, actually. Bitcoin has just for the first time in about, 6 months, 8 months or so, since about August, basically. Beginning of August, end of July was the last time Bitcoin reached the $8,255 level. That's right, Bitcoin has broken through $8,000. Now it's come back down a little in the last few minutes. But basically, we have seen the price of Bitcoin go through $8,000. Remember, it wasn't even at 6,000 a couple days ago. Okay, and I've long said we're going to see the market start to kick up as soon as we see the big levers of all the marketing engines decide this is the time, each in their own time. And of course, the more it happens, the more synchronized it becomes, just because people don't want to miss out. So they all jump to the marketing opportunity to rush for the excitement of the market. And we're seeing that. This is clearly the net effect of that. Okay, whether you think there's going to be a retracement on the market or not, I really don't care. I'm not here to tell you about trading advice. Right? There are plenty of great TA people you can watch for that. Again, this is not that kind of channel. I just do marketing insights about crypto and blockchain. So if you're looking at this from a marketing perspective, this is a time that a lot of operations have decided, that's it, let's pull the levers and go. And we can see that the effect of that is happening. There are a lot of other natural effects in the marketplace that are taking part in this whole thing. Everything from the Litecoin halving to the upcoming Bitcoin halving in the next year to the consensus conference. Is that in effect at all making an impact? Well, generally speaking, I'm of the opinion that conferences do not move markets. Okay, they are a great place to make deals for future movement of markets, but not necessarily for on the day. And when movements happen on or around the day of a conference, a lot of it is just due to hype. That's just the nature of conferences. You build up a lot of hype before the event happens, and it's kind of climactic or anticlimactic, or however you want to look at it. The conference ends and people generally go back to their own thing. And markets don't sustain long-term growth cycles based on a conference alone. They just don't. There's thousands of conferences every year all around the world for all kinds of topics. And not every conference moves every market, obviously. Most conferences don't do anything to any market. That's not the purpose of a conference. The purpose of a conference is to bring together people in a business or an industry, have them meet, work on issues that are in common, move the agenda forward for the association or the host of the event, and generally for people to do networking and to do deals, right? But that doesn't necessarily move markets on the day. Right? It's very rare when it does. So, yes, there's obviously some effect in a more bullish sentiment environment that people will naturally tend to think, oh, well, consensus. Remember last year, consensus was supposed to be a big deal, and it sucked the energy out of the room by delivering nothing that people expected, and least of all the price that people were hoping to see an increase in price during or after the conference. And what happened is you had a run up in price until the conference, which I remember quite well, and everybody was frankly ho-hum about it. Everyone looks to look back at it now and say, oh, look, we did have a rise. Yeah, we had a rise, and people were not that thrilled about the rise. They were all expecting a significantly bigger rise during or after the conference. It didn't happen. A lot of people who believe the news can move markets based on a conference. They were filled on ridiculous hopium in the last throes of their bullish mentality during the some of the darkest hours of the bear market. And yeah, it just goes to show that there was a lot of denial still in that time, that people thought, oh yeah, we're just going to turn the ship around and just go right back up to the moon. And that's not how it happened, of course. So I don't believe that we're seeing this incredible rise as a result of the conference either. And I don't think anyone else believes that either, because clearly this rise has been happening since Bitcoin bottomed in mid-December. And it's been happening dramatically since January. And it's been having even more dramatic effects every month thereafter. February, March, April, and now May, where we're seeing leaps with legs going up quite high. In some cases, more than $1,000 in any given hour that it's moving up like crazy. And it's significant, shall we say. To have moved up $1,000 or whatever in an hour or even a few hours is a big deal, right? Anyway, I don't want to keep this video long, but the point is we have broken through 8,000. There are many reasons why Bitcoin is the leader of this space in this particular bull run. Of course, it's the king of all cryptos at the moment. We get that. But it is the one that is most primed and ready for market, despite the fact that people will say, well, the tech is old and nobody uses it and you can't even buy anything practical with it and this and that. And they always, you always hear people making excuses for how terrible it is. Especially a lot of OGs, they always love to complain about how useless Bitcoin is. It's really not that useless. Like, for anybody, yes, if you live in a Western country and you have all the access to all the finances you need, sure, you don't need Bitcoin, maybe. If you have, enough assets to not care about it. But if you're like most people, I think Bitcoin is actually incredibly useful even today for most people, and definitely for anyone who has access to it and does not live in, a super free country. So, with that said, folks, all I want to say is just be really careful. There's any number of reasons. You can never predict the exact motion of a market. So if you're marketing stuff and you're looking at spending your campaign, don't blow it all now just because the market spiked up a little. But do bear in mind that the market is going up and you don't want to miss the opportunity. Right, so you got to keep your marketing campaigns in sync with the trends of the community of the market, as I've always been saying in every past video where I talk about these kind of topics. So make sure you put the right amount of effort and resources on getting your marketing campaigns done now. And you don't want to miss out on all this energy and excitement. But that said, if your product isn't ready yet, right? If you weren't ready to launch your product because the bear market ended too quickly for you, or whatever excuse you want to give yourself, A, if you can finish that product soon, do it. B, if you can't finish that product soon and cash in on this excitement, then don't rush it, right? Better to not launch a piece of junk product with a horrible marketing campaign than to try to push forward something that's just not going to ever have any appeal or traction because it's not built well, it doesn't, whatever. It doesn't look nice, whatever your aesthetics are. It doesn't work nicely, it doesn't have good performance speed, whatever the issues are. So keep that in mind as the market now sees Bitcoin over $8,000 for the first time in over a year. Okay, right now we're at 78.06 and we dropped a little bit or whatever, but we were at over 80. I want to show you this, and I don't know if you can see that clearly here, but this is with the Bollinger Bands. Okay. Oh yeah, look. So we're back inside the Bollinger Bands. I guess I can hide those. They're really not useful to us right now. Just leave on the moving averages. You can see all the moving averages lines are all in support pretty much at the moment. And of course, this is on the hourly, so lower time frames, But you can see here the price right now is 78.29 for Bitcoin. And earlier, if you put the wick on there, top of the wick, you can see we were at, 82. What? That's weird. I'll go back to the minutes because I know I saw it on a lower time frame. It was extremely high compared to that. Let's get rid of that stochastic, shall we? We don't need that right now. Really don't need the stochastic right now. Okay. So, where were we? 81.50. There we go. So we were at 81.50. I tell you what, 81.50, considering where we started the day, if somebody wanted to tell you that we would be, look at that, on the verge of breaking 8,000 today when you got up in the morning, and that it would maybe even actually happen on the day. Let me also point out that we retested down for a moment at the 78.20 level, right? Or no, was it 78.20? The 74 something level. 74, what is it? 74.16. So we dumped from 8,155 bucks down to 74.50, 74.20 even. And all within a span of like 20 minutes, an hour. Right? That's really fast. But look, it's coming right back up again because the bears, that was a very close call, if you ask me, right? In that sense, like, could we have started to retrace significantly on that? Yeah, probably. Why am I talking about the TA from that perspective? I'm sorry to give you that. I'm not trying to give you technical analysis. Okay, I'm just looking at the chart, and the way that I look at these charts as a marketer, okay, is I'm looking at these charts and I'm seeing their impact. I'm not so concerned about all these micro timelines. They're curious and fun right now because we're in territory that we haven't been in a long time, and it's kind of, we're in a bullish mode and things are growing, and it's kind of nice to see. But from a marketing perspective, I really just zoomed into this to show you the higher timeline, right? The higher price point that it got up to. So yeah, 81.67 or something like that. I think I saw it at 82.55, but anyway, the point is it's above 8,000 it's trading at. Now it's in the 8,000 range. Okay, slightly below now, but it's in that range. You look at this as a marketer, and you have to think to yourself, these are not the conditions in which I should be moving slowly as a marketer. These are conditions in which I should be pushing forward full speed ahead with all the resources at my disposal, but in measured stride so that I don't burn out too early. Because if this is the beginning of a race, it is a long race, okay? And it is at the long hill. And you do not want to start running too quickly too soon, or you will burn out. You will pop, you will break, and you will not make it to the finish line. Then, when the market reaches the all-time high, and you're left holding your broken project, your broken marketing campaign, your broken crypto whatever, it's going to suck because you blew out all your energy before everyone is really ready to go. And as much as it might look like we're ready to go, and as much as it might look like the audience is already there, you have to keep in mind there's still an incredibly small number of people in crypto. And when, for example, Fidelity actually opens up its trading desk to the entire customer base, and not just the VIPs that they've been testing with. Think about it this way. Fidelity's VIPs, okay, they did select a bunch of, significant investors to play with their crypto trading desk for us in order to see higher volumes of trading so they could test things out better, this and that, which makes sense. But think about it. All of those guys, girls trading on that beta all had a very specific advantage. all made moves during that time that they've been testing it out before the rest of the retail customers are allowed to have it. And you have to remember it's a $7 trillion asset management company. Basically, they manage the value. The amount of value that they manage is roughly the equivalent of the world's amount of gold, right? 7-something billion dollars. Sorry, 7-something trillion dollars. So, if you take that into consideration, it could easily be, like without even a question, that we are going to see this market grow significantly in terms of reach and capability for your marketing reach, for your campaign reach, for your customer reach, for your prospect reach. All of that in the coming weeks and months, for the very simple fact that once we have all of these institutions online trading, and they have every reason to do it in a bull run, when people are likely to spend more money, right? Institutions the size of Fidelity are easily capable of swinging the price of Bitcoin by very large numbers, right? And there are more than just Fidelity coming online, right? Traders from many places will be coming online, and other financial institution types will be coming online. And remember, like the uber wealthiest of them all, who are the largest financial institutions that are the slowest and creakiest to move because they don't dare move quickly, like the super wealthy trust funds and things like that, they're planning to buy crypto in like another couple of years, a year or two from now. Like they're planning it. They don't, because to them, they really don't care if it costs $8,000 a Bitcoin or $50,000 a Bitcoin. They just don't. Right? Like, I know it sounds crazy. Why wouldn't they care? Well, they have a longer term investment strategy. So, again, I still don't know why they wouldn't care, but apparently there are some people who are perfectly happy to pay 50 grand for a Bitcoin in another year or two, even though they know they could buy it for 7 or 8 grand right now, right? Because they believe that there's a reason for doing